We will fight the U.S. tariffs with retaliatory trade actions of our own that will have maximum impact in the United States and minimum impacts here in Canada.
The United States finds itself at a crossroads. A quiet but seismic shift is underway, and it's not coming from Washington. It's coming from the North. Canada, once a loyal energy partner, has made a bold decision that could leave the U.S. economy exposed, and it all begins with oil. For decades, Canada has sent millions of barrels of crude oil to the United States, feeding the Gulf Coast's refineries and helping to keep gas prices manageable. But now, with the completion of the Trans Mountain Expansion Project, everything has changed. That project, set to transport nearly 900,000 barrels of oil per day, isn't meant for the U.S. Instead, it's heading west, across the Pacific, to Asia. China, Japan, and India are lining up to buy. And for the U.S., that's a huge problem. In 2024, over 60% of the oil imported into the U.S. came from Canada. That's roughly 4 million barrels every day, the kind of oil American refineries are built to handle. Thick, heavy crude, perfectly suited for the Gulf's processing systems. Now imagine more than half of that vanishing. That's not just a dip in supply. That's a shortage with teeth. Gas prices are already climbing. Some projections estimate a national average of $4 per gallon by fall. In New England, prices could spike even more, 20 to 40 cents per gallon higher. That means long lines, frustrated drivers, and a sudden financial squeeze for millions. It's not just drivers who feel it. Everything from transportation to food production will see ripple effects, higher shipping costs, higher grocery bills, and with refineries scrambling to adjust, the entire supply chain could face disruption. This isn't just a shift in oil flow, it's a geopolitical move. Canada isn't just selling oil, it's realigning its global alliances. For years, Canadian leaders watched as the U.S. imposed tariffs, tightened trade policies, and shifted toward economic nationalism quietly. Canada built trade relationships elsewhere. Asian markets welcomed them, offering long-term contracts, stability, and growing demand. Canada answered the call. Now, the result is clear. Canada is becoming a major energy player on the global stage, and not just in oil. From rare earth minerals to electricity exports, Canada is diversifying its energy influence. The U.S., once the biggest customer, is now just one of many. For U.S. officials, this new reality is unsettling. The administration's previous trade decisions, particularly tariffs on Canadian goods, may have helped push Canada toward China. And that move, once unthinkable, is now a full-blown strategy. China needs oil. Canada has it. The rest is business. But for America, the consequences are just starting to hit. Refineries on the Gulf Coast, which depend on Canadian crude, are facing supply shortages. Energy sector jobs are at risk, and with fewer barrels coming south, the pressure to find alternatives is growing fast. Domestic production can help, but it's not an overnight solution. The U.S. may also turn to countries like Venezuela or Saudi Arabia, but those relationships are fraught with their own complications: sanctions, political instability, and high costs. Meanwhile, Canada is also exploring oil deals with Europe. In March alone, it exported over 8 million barrels to the EU, double the volume of the previous quarter. As Europe scrambles to reduce reliance on Russian energy, Canada is stepping in like a steady new partner. It's not just oil. Canada is also supplying uranium for nuclear power, clean electricity, and rare minerals for electric vehicles. The message is clear. Canada wants to be the go-to country for clean, stable, and strategic energy resources. Back in Washington, the rhetoric is heating up. President Trump has lashed out at Canada, saying the U.S. doesn't need its oil, lumber, or cars. He's reinstated tariffs on steel and dairy and threatened to tax ethanol exports, a move that could backfire on American farmers who depend on Canadian buyers. This new trade hostility is triggering uncertainty in financial markets. Investors are uneasy. Economists are warning of a potential economic downturn fueled by higher energy costs and supply chain disruptions. Meanwhile, Canada is rerouting nearly 900,000 barrels per day away from the U.S. and toward Asia. thanks to the completion of the long-anticipated Trans Mountain Expansion project. It's a strategic pivot that could reshape global energy flows and redraw the balance of power in international oil markets. China, Japan, and India are first in line, signing long-term contracts with Canada while the U.S. scrambles to respond. What this means for the average American is simple: higher prices at the pump. Gas could hit $4 a gallon by fall, and that's just the start. The U.S. imported about 61% of its foreign oil from Canada in 2024. With that supply now rerouted, the shock to the system will be felt across refineries, especially in the Gulf Coast. These facilities were built to handle the heavy crude that Canada produces. Replacing that with other sources won't happen overnight. In response, refineries may scale back production, which doesn't just affect oil, it hits everything. Transportation, food production, and manufacturing all rely on cheap energy. Without it, operational costs rise, and prices are passed on to consumers. Millions of Americans could soon find themselves paying more for groceries, electricity, and daily essentials while wages remain unchanged. But this isn't just about oil barrels and gas tanks. This is about global influence. Canada isn't only cashing in on Asia's thirst for oil, it's rewriting its place on the world stage. No longer in the shadow of U.S. trade policy, Canada is building strong energy ties with China, Japan, and India, countries where demand is growing rapidly. For Washington, this is more than an energy crisis. It's a diplomatic and economic wake-up call. Over the past several years, American tariffs and trade restrictions pushed Canada to reconsider its alliances. What started as quiet discontent has now transformed into a full-blown strategic shift. The U.S. wanted to play hardball. Now Canada's playing back, and playing to win. And that win might come at America's expense. If Canada locks in its new Asian customers, those barrels won't be coming back, even if the U.S. later regrets the fallout. Meanwhile, American oil producers will be forced to look elsewhere, and the government may need to pour billions into expanding domestic production, an expensive and time-consuming solution that won't bring immediate relief. As Canada turns east, the rest of the world is watching. Russia, Saudi Arabia, and Iran won't miss their chance to exploit the disruption. These players are already moving to strengthen ties with China and Europe, stepping into the power vacuum the U.S. is leaving behind. The question is, can the U.S. act fast enough to hold its place in the energy game? Right now, it doesn't look promising. Trump's administration insists America is energy independent, but the numbers tell another story. Canada still supplies more than 4 million barrels a day to U.S. markets. It's a lifeline that Washington can't afford to lose, but might lose anyway. The Premier of Alberta, Danielle Smith, has made her position clear. If the U.S. continues down this path of tariffs and trade obstacles, Alberta's oil will head to Europe next. Already, Canada has doubled its oil exports to the EU in just one quarter. Europe, having distanced itself from Russian energy, is eager to diversify, and Canada is stepping up as the reliable supplier. This isn't just politics. It's real, it's happening, and it's going to hit Americans hard. In New England alone, gas prices are projected to rise by 20 to 40 cents per gallon. Electricity costs could spike too. Canada provides over 11,000 gigawatt hours of power to the U.S. annually. That's clean, stable energy suddenly at risk. And while Washington tries to downplay the danger, the impacts are piling up. Everyday Americans are already seeing price hikes and uncertainty. The trucking industry, farmers, food processors, they all run on fuel. When that fuel gets more expensive, so does everything else. The economy starts to strain under the pressure. Behind closed doors, there's panic. Trump's administration has reinstated tariffs on Canadian steel, dairy, and automobiles, hoping to gain leverage. But Canada has retaliated by targeting U.S. ethanol, a key component of clean energy programs and a critical export for American farmers. If those markets close, farmers across the Midwest will feel the hit. The situation is spiraling. Allies are growing cold, and in the middle of this, the Trump administration seems more focused on controlling headlines than fixing the problem. The larger question looms: is this a short-term spat, or are we watching the collapse of one of the most important energy partnerships in the world? Because what's unfolding isn't just about oil or tariffs, it's about trust, and that trust is eroding fast. Meanwhile, the European Union, freshly distanced from Russian energy dependence, is welcoming Canada with open arms. This isn't just a rebound, it's the start of a new energy alliance. And with Canada now also exporting uranium, rare earth minerals, and clean hydroelectric power, the shift is far bigger than oil. Canada is becoming what some analysts are calling the Switzerland of energy. Neutral, powerful, and essential to everyone. So where does that leave the U.S.? Back at the pump, wondering why gas prices are climbing. In grocery stores, wondering why everything costs more. And in the boardrooms of oil companies, asking how they lost control of a market they once dominated. This is no longer a hypothetical. It's happening. And unless something changes fast, the storm is just getting started. Canada's pivot isn't just about oil. It's about independence, and America's response is exposing deeper cracks. As allies pull away and global markets shift, the U.S. is left chasing a world that's moving on without it. Gas prices are rising, trade partners are walking, and everyday Americans are paying the price. At the pump, in the grocery store, and in their wallets. This isn't just a supply issue, it's a leadership crisis. If the U.S. doesn't shift course soon, it won't just lose barrels. It'll lose its influence. And that might be the real cost of control. Drop your thoughts in the comments. We want to hear from you. What do you think about Canada's bold move and the U.S. response? Let's talk about it below. And don't forget to like this video, subscribe to the channel, and hit the notification bell so you never miss a story that matters.